It's Tuesday, the 6th of August 2019. I'm going to give you a technical analysis breakdown of some UK and US stocks. Let's get straight into it. Hi guys, it's Any, aka the Noctrader, your friendly neighborhood swing trader, back again with another video. Remember to hit that like button, hit that subscribe button, and hit that alert button to get alerts on all my latest videos. I've got Facebook, Twitter, and Instagram at the Noctrader on all social media platforms. And if you check the description section below, you'll see a link to my mailing list. If you join my mailing list, you get priority access to my free training course that I'm creating for new traders, and you also get all the latest videos straight into your inbox. I've also got a Discord chat room called Pip Talk. So that's for all traders and investors. It's just a chat room for anyone and everyone that likes to trade and invest to really just share information and learn from each other. But let's get straight into the video. So it's been a while. Last week, the last couple of days and the last week has been really crazy in the market. Trump's tweet last Thursday really sent the market nosediving. This page would have been a sea of red if I'd shown you yesterday, but it seems that the market's starting to slowly recover off the back of trade tensions between the US and UK. But it's good to have a look at the macro level, what's going on at the macro level, as that affects even the technical analysis that I'm doing, even at a shorter time strain than someone that's an investor. So yeah, just to recap, Trump tweeted on Thursday that he was going to impose tariffs, 10% tariffs on 30 billion worth of Chinese exports. And then recently China retaliated by saying that they weren't no longer going to buy American agricultural goods, which was part of the agreement in their trade deal. So there's been a lot of tit for tat. Now I gave my theory as to why Trump made that tweet in my other video. If you check that video out, it's called Trump's Master Plan Exposed. Check that video out to see my theory on what I think Trump's really up to. But yeah, let's get straight into some technical analysis. But I just thought I'd go through this because this has really dictated why a lot of the chart patterns are behaving the way they are right now. On the a lot of the UK stocks, I'm not going to cover a lot of the UK stocks or US stocks today. There's only two stocks I want to cover, and that's because most of the stocks that I would normally cover have just been decimated and they've kind of broken pattern. They haven't been behaving as they normally do because of, as I said, the Trump and the US and China trade deal. Everything's kind of just nosediving and breaking pattern. So it's not really of much use to any of you for me to kind of cover charts that are not acting in their normal behavior. Boohoo's done actually pretty well. It's still climbing. There's a lot of the UK stocks have kind of stayed true to their course, but yeah, I'm gonna go straight into first of all, I'm gonna go straight into GUSH. Where's GUSH? GUSH. So GUSH is the inverse ETF. It's a ETF for gas and oil. Now I've taken a long position. Normally I don't take it on this account, but I took it in this account by accident. I didn't realize, but I just thought I'd leave the trade there. So on the 1 hour chart, I saw a prospect of a long position because there's a descending channel pattern, and every time it's hit this support line, it's kind of climbed up, at least for a little bit. I've set a stop loss that's a little bit far away because this, even though it's hit support, it has a tendency that it could double bottom before climbing, so I want to give it space to breathe just in case it double bottoms. If you can see this support line here, this resistance line here, you can see that it's not actually intersecting, and that's because we're actually using a linear scale, and you know the trick for ETFs is to use a log scale. The reason why I use a log scale for ETFs is because ETFs are decaying assets, so they decay over time, and just to account for that, to use a log scale. Don't ask me about how the maths works for that. I don't know, but it works. Shout out to Walrus who showed me this little trick. Now, see, now I've used the log scale, like the lines are a bit more true, and these two support and resistance lines for the descending channel pattern are quite consistent. The 180-day simple moving average on the 1 hour chart is descending, so it looks like price is still going to continue descending. But as you can see here, double bottomed at a resistance line and it climbed for a bit. Here, when it climbed 3 days, it went at 179 pips. I'd hope for something similar here. So 179 pips would actually take us to about, would take us even further actually. Wait, 174 pips, oh yeah, because it's a log scale, it kind of skews the angles. But yeah, so I've set my resistance line at about 415 because I'm trying to be more reserved with this trade. That'll make me £315 because I put £5 per pip. I'm just gonna see how this plays out for the next couple of days, and hopefully it'll be a nice little long position and take profit at around £350. So yeah, this is the long position I'm taking right now for GUSH, the oil and gas ETF. Now, the other one I'm looking at is Bitcoin. Now I don't trade Bitcoin, but it's as I said, I love doing some analysis on it. So on a weekly chart, Bitcoin looks like it's making a kind of wedge formation, and so the next place it would potentially hit is 13,000, based off of this kind of hypothesis of a wedge formation. If you go down to the daily chart now, you can find that at 9,000 it double bottomed. There was an old resistance that became a new support at 9,000. So if you entered here, then well done to you, because that would have been a great entry point. And then what I would have done is you would have climbed up here, and I think it's going to make its way up to 13,000. The reason why Bitcoin is climbing is because it's inversely proportional to the market. It's behaving similar to gold, as people are using Bitcoin as a safe haven to retain the asset, retain the equity of their investments. As we can see that because of the US-China trade war, a lot of US equities and even Chinese equities are losing value. So commodities like gold, silver, or perhaps Bitcoin are being propped up, and people are buying them as a way of hedging their bets in the market. So as the market keeps going down, you can expect Bitcoin to keep going up, and that's what we're seeing here. It's already had a little bit of a climb, and I believe it'll climb up to 13,000. Where it goes from there, I do not know, but that's my hypothesis for Bitcoin. So it's a short one today, but it's Any, aka the Noctrader, signing out.